Hello Level 4 students. In this assignment video, I'm going to be bringing you information about how to answer your questions, your assignment questions effectively. Okay, before we start with the questions, there's points I need you to note. One, make your assignments as original as possible. Use your own words. Do a lot of research so that you get to understand the context of the question before you go ahead to do your assignments. Number two, use valid references. I like to avoid Wikipedia as much as possible, but if that's all you have, make sure you always validate the information you gotten from Wikipedia, okay? And then don't forget to also include references, the valid references, due to plagiarism, and then because your assignments are going to be turned into turning in, so your level of plagiarism is going to be revealed. So having that in mind, as much as possible, let your work be original. Okay, to the question. So level 4, we're going to be getting the question from Unit 5, Management Accounting. Okay, this category D1 says, discuss the objective of management accounting in an organization. Now, what is required for you to do in this question? Yes, number one, you have to include points like how management accounting helps in decision making, managing tax in large companies, as well. Then go on to discuss the 4 basic plans in an organization, design information, classification of costs, etc. And then conclude and give your own opinion using data that you have obtained from your own valid opinion, as well as you have to use graphical representation of this data that you have gotten. Okay, now answering the question. As I said, make it as relatable as possible. So for this illustration, I'm going to be using Dubai RTA. Okay, so now the answer says, from you can see on the screen, a more elaborate explanation is given there. A managerial account records and analyzes financial information by means of collecting, interpreting, preparing financial data. You just give the definition and then you relate it to RTA. The illustration I used, RTA produces 40 coaches per month, and the fixed cost will be 1,000 dirhams per month. Then each coach will be set to incur operating costs 25 dirhams. Okay, after you do this, after you do the division, you're going to come up with 25 dirhams. So you add this to the variable cost of 300 dirhams. So it's going to give you 325 dirhams per coach. So you see, the more you produce, the lesser your price will be. That illustration has to be put in a tabular form. You can use a line graph. For me, I use the bar chart. You can see it on the screen for a more elaborate explanation. Okay, and then you go on to analyze using various analyses, volume variation, material cost, etc. in relation to the RTA. Now, category P4 says, explain what budgetary control is. Now, what is required for you here? Here you explain what the budgetary control is. You state, the advantages and disadvantages of budgetary control, like maximization of profits. Now, you can say it helps RTA maximize the profits. It also helps RTA the project coordination. And then other explanations of different advantages is highlighted on the screen. Okay, then also the disadvantage as well. Then go on to define static budgets. Okay, the explanation is on the board, and static master budgets. Using an illustration, like for me, I've used an illustration of Zara. Okay, using Zara as a company, the annual budget is a static budget. Now, if it's a static budget, example, that means the budget is like 900,000 dirhams. So regardless of if the sales increase or not, regardless of if the actual sales for the year is 6 million, 12 million, or 14 million, the static budget remains 900,000 dirhams. And then you, in a tabular form, you put the advantages and disadvantage of static budgets. An advantage could be that it helps to monitor expenses, sales, and revenue of Zara as a company. And a disadvantage is that it's a constraint of not reflecting the organization's forecast and how goods are allocated, etc. Now we're going to be talking about a flexible budget. You go on and explain what a flexible budget is, and then you use a valid real life example like Amuda General Trading of how it has a budget of 10 million dirhams and in revenue of 4 million dirhams, cost of goods sold, etc. More elaboration is on the screen. And then you go on to explain the advantages of flexible budgets, which is a good tool for evaluating the performance of managers. A disadvantage could be it only works within a relatively limited revenue range. Okay? Then it's also using West Zone as an example. West Zone budget points out what aspects of business items produce money and which ones do not. So they actually know which items to stock and which items to carry out. Go on and tabulate the advantages of standard costing and disadvantages of standard costing in tabular form. More elaborate explanation on the screen. And then service organization.